So we just wrapped up another week in the stock market. The stock market is back in the red again. The SP 500 index is down over 2% this past week. When it comes to market sentiments, things are not looking good either. The fear and greed index shows that we are back in extreme fear. A week ago, we made a switch from extreme fear to fear, but this week we have made a switch back to extreme fear. So this is showing that fear is returning back into the market, mostly because of the recession fears. But when it comes to performance, we see that the tech services sector and the electronic sectors were the worst performers this past week. But the finance sector did a little bit of a comeback. But now we've seen that the utility sector, the industrial sector, the transportation sector, and the health services sectors were the best performance for this past week. So this is what happened this previous week. But in this video, I want to focus more on what is about to happen this upcoming week. So in this video, let's look at the S&P 500 index to see what is likely to happen for this upcoming week. But before doing that, welcome to the channel. My name is Seth and I cover the stocks and crypto market. So if you are enjoying the content, help a brother out. Hit that like button, hit that subscribe button, and turn on notifications. Now let's jump right into it. So at the moment, we are looking at the chart for the S&P 500 index, and I am currently in the weekly time frame. When I caught the top on January 7th around here, when I caught the top for the S&P 500 index, when I said we were 2 standard deviations above the mean, in the weekly time frame for the S&P 500 index, I told you guys that we'll be seeing a 20% down, right? So on January 7th, you could go back and check me on that, not to brag or anything, but on January 7th, I said we were 2 standard deviations above the mean in the weekly time frame for the S&P 500 index, and it is likely we'll see a 20% dump. And since then, we have been seeing the S&P 500 index trade in this descending channel pattern. And this descending channel pattern is usually a bullish pattern. It usually ends up being a bullish pattern. We will usually break above this resistance line and the price will push higher. So I expect the S&P 500 index to break above this resistance line at some point in the future and push higher. But for this past week, we see that the S&P 500 index, after hitting the 1.0 Fibonacci extension level, which is around 3,929 points, we see that the S&P 500 index pulled back to the 1.272 Fibonacci extension level, and it hit the 3,738 points. It is much clearer to see this in the 1 hour time frame. So let me switch to the 1 hour time frame. And from the 1 hour time frame, we see that it is much clearer to see now, right? We see that after we hit the 1.0 Fibonacci extension level over here, when we hit this line, the 1.0 Fibonacci extension level, we see a pullback back down to the 1.272. I was expecting us to push a little bit higher to about 4,000 points. But after we hit this 3,929 points level, we see that we did a pullback, which I was expecting. I told you guys that that was a trap, right? So we did get that. That was a trap. We got the pullback like I was expecting, and we got a pullback all the way back down to the 1.272 Fibonacci extension level, which is around 3,738 points, right? So for this upcoming week, I do expect a little bit of a pushback, right? I expect the S&P 500 index to push higher. Let's confirm this with the technical indicators, right? I expect us to push higher to about the 1.0 Fibonacci extension level around 3,929 points, right? So let me bring this back. So I expect us to continue higher until we hit the 1.0 Fibonacci extension level around 3,929 points. We could continue even higher if we get some good news in the market, but I will be shorting it in case we hit the 3,929 points level. But let's confirm this with the technical indicators like I was saying before. So let's look at the RSI. So when we look at the RSI is looking bullish at the moment. After we bounced off the 30 level, we are seeing the RSI pushing higher now, right? The RSI has broken above the midpoint, and I expect the RSI to continue pushing higher this upcoming week. Maybe for the first 2-3 days, I expect the S&P 500 index to continue higher. So I expect the stock market to bounce higher for this upcoming week, at least for the first 2-3 days, right? Let's confirm using the momentum indicators. Let's look at the MACD. And the MACD is also looking bullish. The MACD line, the blue line, is above the signal line, the orange line, right? So things are definitely looking bullish. And this is confirming that we will probably see higher prices in the stock market for this upcoming week, at least for the first 2-3 days, like I said before. All right, let's look at Let's look at the other momentum indicator. Let's look at the squeeze momentum. The squeeze momentum is also confirming that we are seeing a lot of buy signal, a lot of buy volume at the moment, right? Or buy momentum at the moment. A lot of people are buying at the moment, and we are seeing the first green bar on the squeeze momentum chart. So things are definitely looking good. It looks like people are buying, and then this is pushing the stock market a little bit higher. And I do expect the SP 500 index to continue higher, like I said before, until we hit the 1.0 Fibonacci extension level around 3,929 points, right? So far, we have been respecting the Fibonacci levels, so I do expect us to continue until we hit the 3,929 points level. When we go back to the weekly time frame, we see that it is possible that the S&P 500 index will continue even higher above the 1.0 Fibonacci extension level, right? So I do expect us, after, in case we get some good news, we could even continue until we hit about 4,000 points. And in case we get more good news, then we'll probably even break higher until we hit maybe about 4,200 points. But I will not be expecting that, right? I will lean more conservative at the moment, and I would expect the S&P 500 index to head back to about 4,000 points or the 3,929 points level, like I said before. So for the upcoming week, there's a high probability that the S&P 500 index will continue pushing higher to about 3,929 points or the 1.0 Fibonacci extension level, where I believe we will probably see a pullback. But in case we get a good amount of buy volume or buy momentum, then that could push the S&P 500 index even higher to about 4,000 points, where we'll probably still see a pullback because we are in a bear market, right? But that all depends on the Feds. If the Feds come out with some good news, then that will push us even higher past 4,000 points. For next week, I expect the tech sector to see a good amount of bounce. I have my eyes on Nvidia. If you want to see a video on Nvidia, let me know in the comment section. But now make sure to help a brother out. Hit that like button, hit that subscribe button, and turn on notifications. And if there are any stocks or cryptos that you would like for me to look at in my next video, let me know in the comment section.